Hello, everyone. It's a sunny morning out here. Good morning to you. And depending on whichever part of the world you're tuning from, good afternoon and good evening to you. Well, happy new month to everyone, and I welcome you to the first edition of the Extreme Speed Life. As we are going to be starting the new month on a positive note. But before we begin, let's quickly run through our daily routine by confirming that we are all on the same page. So if you can hear me loud and clear and you can see my screen, please let me know in the comment section by typing hi. So I would like to see your highs in the comment section. If you can see my screen, you can hear me loud and clear, just type in hi in the comment section and this will be a nudge for me to go ahead with a live session. So let me see your comment please while I try to load up my chat. All right. So I can see some comments here. Thank you very much, guys, for your feedback. I can see your comment 7962500. Well. Thank you. Slavash, good morning to you. I hope I pronounced that correctly. Party 38, good morning. Jamal02, thank you very much. DX, thank you very much. All right, I will take this as a confirmation that we are good to go this morning. So once again, I welcome you all to yet another promising edition of the Extreme Speed Live. My name is Sharif Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be looking at the current market structure from a technical standpoint using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movements on the assets on our watch list, using this information to protect our current positions and of course strategically position ourselves ahead of the New York session. Well, for those of you who are joining us for the first time, you are highly welcome and you might be wondering, what is this all about? Well, as technical traders, we gather here every day to come together as a community and engage in follow-ups and reviews of our current positions. Our main focus is on preparing for the New York sessions by utilizing fundamental tools. The session kickstarts by 10 a.m. UTC, 11 a.m. West African time. So I highly recommend that you stay tuned in during this time so that you don't miss out on the insights that we will be sharing during the session. And by being active participants in subsequent editions, you will gradually enhance your understanding of our analytical approach. Our aim here is to equip you with knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, we extend a warm welcome to you. And on that note, let's dive right into the business. And as usual, the first thing we normally do is to check on the economic calendar. And for those of us who have been with me in this community for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So on the economic calendar for today, Wednesday, November 1st, we have a handful of high impact events from the US economic docket. Now, the first event we look forward to here is the ADP employment change, which is a data released by the Automatic Data Processing Incorporation of the United States. Now, this data here is a measure of the change in the number of employed people in the United States, and generally speaking, a rise in this indicator has a positive implications for consumer spending, hereby stimulating economic growth. So a high reading in this case scenario will traditionally be considered as positive and in the long term bullish for the US dollar. Now, if we look at the previous data for the month of September, it came in at 89,000, and we have economists projecting 150,000 for the month of October, which is a whopping data here and giving us a sign of an expansion in that particular sector. So we shall be looking forward to what the actual data will be, as this will be giving us an cues into how the market will be reacting to this event. Then we also have the ISM manufacturing PMI coming up in about 3 hours from now. This data is released by the Institute for Supply Management, and it shows us the business conditions in the US manufacturing sector. And one thing about this data is that it is generally considered as a significant indicator of the overall economic conditions in the United States. A result above 50 is considered as positive, while anything below 50 is considered as negative. Now, if we look at the previous data for the month of September, it came in at 49, and we have economists projecting another 49 for this month, for the month of October. So it just shows us here that there's really not been any major traction in that sector. So we look forward to see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? Then the next one here, which is coming up in about 7 hours from now, is the Fed's interest rate decision. Well, this is one data that has been on the radar of every trader in the market for the last couple of weeks now, and everyone is patiently waiting for this, as this will play a major role in determining the trajectory of the US dollar's price movement. Now, everyone is the majority are expecting an unchanged interest rate. That is, interest rate will remain at 5.5, just as it was written the previous meeting. So we look forward to see what the actual figure is going to be like. Then we also have the Fed monetary policy statement and the FOMC press conference, where the Fed chairman will be giving a speech. Will be attending and welcoming questions from the members of the press. Well, whatever he says here will definitely be giving us an insight into the central bank's outlook on the economy, the reasons why they have either made interest rate unchanged or increased, and potential policy shifts. And of course, this will be impacting our trading decisions and market sentiment. So with all the information we have here, we want to be anticipating this event with the knowledge that the anticipation of this event alone has a tendency of influencing market sentiment, which definitely will dovetail to price action reflecting on the chart. So with this information we have gathered here, let's dive right into the chart and look at things from a technical standpoint. So the first asset on our watch list for today is the USOILSPOT. Now, on the USOILSPOT, we have quite an interesting trading setup ongoing right now in this market. And in fact, I will consider the USOILSPOT as the most profitable asset since the beginning of this week amongst the assets we have on our watch list. So far, so good. We had 2 positions running as at this morning, running with over 300 pips in profit. And right now, it appears price has taken us out of our position. If you had moved your stop losses accordingly, you will definitely have been taken out of that position. Now, for the sake of those who are not part of our sessions yesterday, Tuesday, and Monday, I would like us to run through how the week started for us here on the 1 hour time frame and what led to the decisions we made. Well, at the beginning of the week, it was more of a consolidation phase. As we saw here, price was initially confined within the range between the $84.60 level and the $83.85 area, giving us an insight into the level of indecision at the beginning of the week. And of course, you know how we do it in this community, especially when we have this kind of uncertainty in the market. We want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And of course, at no point in time did we see price break out of the resistance line, but we saw at every point in time, we saw our sellers were trying as much as possible to break through that support line at the $83.85 zone. And a couple of hours into the New York session on Monday, we saw price broke down the structure, retest if you missed out on that first one, and since that moment, we have been selling the US All Spot. Now, during our live session yesterday, we also acknowledged another beautiful range where price was confined within the $82.80 level and the $82.50 area, where we, of course, were looking forward to the breakout or breakdown of that range to give us an opportunity to trade. Now, we talked about the potentials of sellers, of course, but one thing we said about, the potentials of buyers. And one thing we said about buying opportunities in this market is that we will need price action to take out this descending trend line before we can consider buying in such a way that we have something like this, price retrace back into structure to incite an uptrend move. And of course, this never happened as we saw price action break down the support line of that range to give us another opportunity to add more sell position to our existing trade. So the first sell position here moved over 300 pips into the $80.85 area, while the second position moved over 130 pips in our favor before the bullish expectation here happened. And for those of us who took advantage of these opportunities, well done and kudos to you for being on standby to capitalize on this move. Now, at this point in time, you shouldn't be in any sell position right now, as if you had moved your stop loss accordingly, price would have taken you out with a significant amount of profit. So well done if you had done so. Now, with the way things are going right now, it appears that oil prices has continued their downward trend for the third consecutive day, hovering near a 2-month low reached the day before. Now, this commodity remains subdued, and in fact, we saw what happened during the Asian session. We saw some indications that that may likely incite more downtrend scenario, especially if we consider the diminishing global supply concerns. And if this continues like this, it's likely that price action will further drop to the downside. But if we look at things from a technical standpoint, how do we intend to position ourselves ahead of today's trading session? Well, before we go into the details on what we are going to be looking at, that is the potentials the buyers have and of course the strength the sellers have in this market, let's take a quick look at the higher time frame so we can have an holistic perspective into what is really going on in this market. And for the sake of those who missed out on our earlier sessions, you have the privilege of being on the same page with us. Now, to start this week, we started our analysis on the daily time frame. Now, the first thing we observed on the daily time frame is the fact that since the month of March, price action has been bullish. And in fact, we have a couple of trend lines here which emphasize the strength of the buyers in this market. So after we connected a series of higher lows here, we have this temporary bullish trend line. Then we also have the major ascending trend line right here. And at the beginning of the week, we saw at the end of last week's trading session, we saw how price action continued to find buy pressure above the ascending trend line, which was giving us an insight into the potential uptrend continuation at that point. Then in addition to this ascending trend line was that beautiful key level we situated along the $85 area, which has been a convincing factor that determines the direction of price action in the last 1 year. And because of this key level situated here, you know how we use our key levels in this community. As long as price remains below the key level, we of course want to be looking out for patterns and structures that supports the idea of selling that asset. And not unless price breaks out of the key level can we start considering buying. Now, with the information we have here on the daily time frame, we scaled further down into the 4 hours time frame to identify a simple setup that we are going to be using to guide our decisions for this week. And what we did on the 4 hours time frame was to take into consideration the nature of price action since the beginning of the month of October. Now, since the month of October started, it was more of a very strong impulsive move to the downside, but something interesting happened during the first week as we saw how the $81 level or the $81 zone became a barrier for sellers to break through. At every point in time sellers tried to break through the structure, it was met with strong resistance from the buyers, as you will see here. Every attempt by the buyers to push in, the sellers to push in, we saw how buying potential came in to negate all attempt by the sellers to break through that zone. And in fact, in the last 24 hours, despite the strong bearish momentum that started this week, you will see that as soon as price got into this demand zone again this week, we begin to notice some buy pressure resume again. Now, going into today's trading session, the question we want to be asking right now is, will this demand zone continue to become a platform for buying opportunity, or are we likely going to see a situation where price will break down this demand zone at the $81 area to incite a downtrend continuation? Now, you would agree with me that we are at a crucial juncture in the market considering the buying power around this area, and we also have a tendency of price climbing back up into the $85 area. So what we are going to be doing right now is to scale down into the 1 hour time frame where we want to see things more clearly, and let's see if we can have a pattern or market structure we can use to guide our trading decisions for today's trading session. But one thing I would like to say here is that if price action still remains above the demand zone and we continue to find buy pressure here, then it will be reasonable for us to look out for structures and patterns that support the idea of buying this asset on the 1 hour time frame. But if price breaks down the demand zone, then we might likely be seeing a massive sell-off in this market. Now, scaling down into the 1 hour time frame, we'll begin to see things more clearly. Now, on the 1 hour time frame, we have the privilege of seeing how participants in this market has been reacting to this current market structure since this week started. Now, the first thing you will observe here is the consistent and uniform lower highs, which gave us this beautiful descending trend line to work with during our live session yesterday. And of course, you know how we treat our descending trend lines in this community. As long as price remains below the descending trend line, we shall feel comfortable in a sell position, and of course look out for patterns and structures that supports the idea of selling this asset. However, despite the strong bearish momentum in this market, we saw what happened during the later part of the New York session stroke the Asian session, as we saw how the sellers found it difficult to break through that $80.85 zone, which happens to be the lowest point price action has been for this week. And in that regard, we have a support line there which will be helping us to guide our trading decisions for this week. Now, despite the buy pressure here, it is not reasonable that we jump into a buy position right away, considering the fact that price still remains below that descending trend line. And of course, these bullish expectations we saw here, for me, will be considered as a retracement of that bearish impulsive move where I will be looking forward to see how far this retracement phase will go before another downtrend continuation happens. And in fact, since we have a trend line here, we might likely see price come back into this trend line, which interestingly shares a beautiful confluence with that $82.15 level, a level which was broken during the trading session of yesterday. And of course, you know how, from a technical standpoint, whenever price action breaks down a structure such as the $82.15 level, we expect that price will at some point come back, retest the structure to incite a downtrend continuation. Now, with the way things are going right now, if price action gets into this area, then we will be at a crucial juncture where we will require to be very patient to see how market participants will be reacting to that price level. Now, if we see that buyers are finding it difficult to break out of the $82.15 level and the descending trend line, which of course would reflect on the chart as continued selling pressure below that structure, then we want to be anticipating a downtrend continuation. So we will be looking out for reversal patterns like double top structures, head and shoulder patterns, or any sort of reversal patterns that comes around there to join a downtrend scenario. And if price continues to drop further to the downside, breaking down the $80.85 level, then we want to be adding more sell positions to our existing trade. However, if the contrary happens in this case scenario, and instead of a rejection there, price breaks out of the $82.15 level, please note that a breakout of the $82.15 level would also have broken out of that descending trend line. And if we cite a breakout of this trend line, then this might likely be a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt, hereby giving us an opportunity to join the uptrend move. Now, in this case scenario, we are not going to be jumping into a buy position right away because the breakout of this descending trend line could turn out to be a false breakout. So in that regard, we want to wait for confirmations to happen, which will come in the form of a retest of the structure that was broken, that is the trend line, or the $82.15 level, where the appearance of buy pressure will be all we need to join an uptrend continuation. Now remember that we also have multiple levels here that we can use to capitalize on this uptrend move. So we have levels such as the $82.80 level, we have the $83.85, and of course the $84.60 area, where depending on how price breaks out of the structure, we'll be welcoming more buy positions to our existing trade. So this is how we are going to be considering buying this asset today: a breakout retest of that descending trend line and the $82.15 level. So you can see how this crucial area is going to be playing a significant role in determining the direction of price action today. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. Now, what happens if price does not get into that crucial juncture in the market and instead continues to nosedive to the downside? Well, we want to be positioning ourselves below the $80.85 level, as a breakdown of the structure, taking out all the buy position there, will be a beautiful signal to join the downtrend continuation. So let's see how the market will play out from this area. So you do want to be marking out this level, and in fact, if you have any questions or you need some further clarifications as regards to this current setup, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart. Then I just want to chip in something here. This area here, the $82.15 level, let me put it at a psychological area. Let's use the $82 zone. Let's use the $82 zone instead. So because of the psychological level of that price, so let's use the 82, and it also shares a confluence with our trend line. So let's see how the market reacts to the $82 area, and this will give us clues on what to do next. A breakout will welcome buying opportunities, while continued rejection will welcome selling opportunities. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100. And while I was trying to decipher what the trajectory of price action would be for today, I was able to identify a very interesting setup here on this chart, and I'm very much excited to share them with you this morning. Now, let's talk about what has really happened since the beginning of the week and what led to the situation we have here. Remember that since the beginning of the week, we have been holding on to a bullish bias here. We have been buying actually, and price action had continued to find higher highs. But it appears that we have a barrier as buyers beginning to lose momentum as soon as price got into that 14,400 and 14,420 area since the last 12 hours in this market. Remember, we had a range at the beginning of the week where price was initially confined within the 14,270 and the 14,225, giving us an insight into the level of indecision at that point. And of course, you know that whenever we have a range like this, we do exercise patience and wait for either the breakout of the resistance line to happen to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And of course, at no point in time did we see price break down the support line at the 14,225. As we saw most of the time, it was more of breaking out of the resistance line at the 14,270, giving us the privilege to take advantage of buying opportunity at any instance price breaks out of that structure. And remember that we had our stop losses for the first buy positions right below the 14,225, which was at any point in time triggered. So it was more of an interesting buy position, and in fact we had the privilege of adding more positions at the breakout of the 14,320 level. So it was an interesting journey. Let's see if you still have a buy position running right now. Well, we have about 80 pips on the first buy position, and for the second buy position we have about 30 pips. But personally, I already have all my buy position taken out. So if you had moved your stop loss early enough, you must have been out of these positions. But if you're still in the buy position, I would encourage you at this juncture to move your stop losses, secure the current buy position, as anything could happen. Remember, we are looking forward to some economic features from the United States, which has a tendency of influencing some volatility in this particular market. So ensure your positions are very well secured at this point. Now, with a well-secured position at this juncture, what is going to be our plans for today? How are we going to continue buying, or are there chances that due to this limited pressure around the 14,420, limiting the bullish expectation, can we have a sell potential today? Now, for the sake of those who missed out on our earlier live sessions, and for the sake of clarity as well, let us run through our higher time frame. Let's see what we saw at the beginning of the week that led to the current market structures we were able to identify on the lower time frame. Now, the first thing we did at the beginning of this week was to run through the daily time frame, where we were able to affirm that this market has been very, very bullish since the beginning of this year. And in fact, we had an ascending trend line marked out after connecting the series of higher lows, as you will see here. And not until a couple of weeks ago, we finally saw the breakdown of that ascending trend line for the first time this year. Well, this breakdown here did not come as a surprise as we were already anticipating it, as you will see how price had consistently found lower highs prior to the breakdown of that ascending trend line. Now, in addition to this, we had a couple of levels. We had the $14,000 area, which happens to be our key level for this week, where we were saying that as long as price remains above that structure, we look out for buying opportunity. And unless a breakdown retest of the 14,000 happens, can we start considering selling? Well, the breakdown of the ascending trend line that happened a couple of weeks ago incited the idea of a potential retracement. You all know from a technical standpoint, when price break down a key structure such as the ascending trend line and the 14,650 zone, we expect at some point in time price may retrace back into either this level or the ascending trend line to incite a downtrend move. And when we begin to notice buy pressure resume just above the $14,000 area, we were of the opinion that this might likely be a retracement back into structure in the anticipation of a downtrend move. Now, with this information in mind, we scaled down into the 4 hours time frame, where we were able to identify a simple setup that we were using as a platform to guide our trading decisions for this week. Now, what we did on the 4 hours time frame was to take into consideration the nature of price action since the beginning of the month of October, and in fact we saw a beautiful descending channel, after connecting the series of lower highs. As we can see here, we have the resistance line of that descending channel, and then we also have the support line of that descending channel after connecting the series of lower lows. Now, since the beginning of this week, though price has been finding buy pressure, but one thing you would notice here is how the 14,400, a level which was broken during the midweek of last week trading session, as you will see here, had played a major role in negating all attempt by the buyers to break out of that structure. Now, this level here is a very key area, and in fact we saw the breakdown of this level here, and technically it is expected that price breaking down a structure like this may come back, retest it to incite a downtrend scenario. Now, if the consistent selling pressure below the 14,400 continues, we might likely be seeing price drop further to the downside. Now, to capitalize on that move, we need a simple setup to guide our decisions, which we are going to be looking at on a 1 hour time frame. However, if price will break out of the 14,400, price has already broken out of the resistance line of that descending trend now already. If the breakout of the 14,400 happens, we might likely be seeing an uptrend move. Let me adjust this resistance line. Okay, so we might see an uptrend move here. So what we will do right now so that we can position ourselves ahead of the next move is to scale down into the lower time frame so that we can see how participants in this market has been reacting to that zone between the 14,400 and the 14,300 area. Now you will see something interesting occurred here on the 1 hour time frame, which is going to be what we will be using to guide our decisions for today. Now, if I zoom out of this structure, you will see that price action appear to be gradually transitioning into a downtrend continuation pattern, as I can see something looking like a wedge pattern at this point. Now, to give a visual representation so you can see what I'm talking about, look at this impulsive move all the way into the 14,050 area, and you can see price has been consolidating since the beginning of the week, hereby transitioning into what looks like a wedge. And technically and from a theoretical standpoint, when this kind of pattern emerge on the chart, we are looking forward to a downtrend continuation where the signal will only come at the breakdown of the support line of that pattern, retest of structure to incite a downtrend move. Now, if we look at the support line of that pattern, you will see how it interestingly shares a confluence with the 14,320, a level where we bought the last buy position we had. Now, if price action drops below both this trend line and the 14,320, we want to be considering selling the USTech100. So this is the only condition for us to join a bearish move. And in fact, if price break down and considering the theoretical expectations of this pattern, we might likely be seeing a massive move to the downside. However, it is not all the time that this pattern fall through with all expectations. There are times that we see situations where price goes the opposite way. And of course, considering the fact that price has been bullish since the beginning of the week and price still remains above that ascending trend line, we cannot ignore that buyers still have a say in this particular market. And in fact, if we do want to consider buying this asset today, I want to be looking forward to price action taking out all the sell positions around the 14,420, a level which happens to be the highest point for this week. And remember, we talked about this level too on the higher time frame. So price breaking out of the structure today will be a beautiful opportunity to add more buy positions to your existing trade. That is, if you still have a buy position running right now, and if you don't, then this will be a new opportunity to join an uptrend move. So this is how we are going to be trading the USTech100 today. It's a simple setup we have here. We have a trend continuation pattern formed already. We're looking forward to the signal in the form of a breakdown of the 14,320 and the support line of that pattern to join a bearish move, while the breakout of the 14,420 will be welcoming buying positions. So our center of focus for today is basically between the 14,420 and the 14,320 area. So it's a whopping $100 range. Let's see how the market will react to the structure. And of course, if you are patient enough and allow your structures to mature, you will definitely be in profit by this time tomorrow. So let's see how the market will play out. We shall be back here tomorrow to review how well this is doing. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds as usual to see if there are any questions, while you also use that time to mark out these levels on your chart. All right. So in the absence of no questions, let's assume that we are all on the same page and my explanations are quite comprehensive enough for us to adopt. So with that being said, we will be moving on to the next asset on our watch list. I see your comment, Valdemiro LM. Good morning to you. Keshi Muata, good morning to you. I'm not sure I understand your language there. All right, totally simplified. All right, I'll take that as a compliment. Dino, good morning to you too. Glad to have you around with us this morning. So with that being said, let's move on to the next assets on our watch list. So the next asset on our watch list for today is the GBPUSD, and in fact we have quite an indecisive phase going on in this market right now. as a lot of people will now be in doubt of the bullish expectations we have in here, but everything is still screaming towards an uptrend situation here as long as price still remains above our ascending trend line. Well, despite being taken out of our buy positions yesterday, remember we were able to capitalize on some buying opportunity. The pound sterling still displaying some defensive stance and is holding steady above the range we initially identified at the start of this week, highlighting its potential for further buying opportunities. Well, on the other hand, the US dollar is maintaining its recovery gains, supported by higher treasury yields as market participants anticipate the Federal Reserve's decision coming up much more later today. Additionally, attention is also focused on the upcoming US job data and the ISM PMI figures, which is the reason why we are noticing this indecisive phase going on in this market right now. But personally, I still think that this market structure holds a bullish outlook unless those trend lines are broken. Now, from a technical standpoint, let's run through how the week started for us in this community and what led to the decisions of buying these assets. Well, the first thing we saw at the beginning of this week was these ascending trend lines. In fact, we were able to connect the series of higher lows, giving us, in fact, we have a couple of these ascending trend lines here, which we said we will be using to guide our trading decisions for this week, and that as long as price remains above this ascending trend line, we continue to hold on to a bullish bias. Now, as you can see, since the beginning of this week, there is no point in time where this trend line has been broken to the downside, so the bullish momentum still looks very valid at this point. Then in addition to those ascending trend line was this level. Remember, we had a range identified where price was confined within the 1.21330 level and the 1.21060 level, giving us an insight into this indecision going on at the beginning of the week. And of course, for the fact that price still remains above our ascending trend line, we were looking forward to the breakout of the resistant line of that range to give us an opportunity to buy. And as you will see, price action has respected that resistant line. Even though we had selling pressure push price to the downside, we can see how that resistant line still continues to hold the bullish bias in this market. Now, yesterday we were privileged of adding more buy positions to our existing trade. Remember, we projected the 1.21600 level as an area to look out for more buying opportunities. We also added one more level at the 1.21750 to capitalize on that uptrend move. And as you will see here, we had a situation where price moved over 65 pips on the first buy position. We saw about 40 pips on the second buy position, while we also had about 25 pips on the third buy position, giving us a whooping over 125 pips in profit before the bearish momentum began. And I do hope you moved your stop losses like we usually emphasize here in this community, and if you had done that, you must have been taken out with a moderate size of profit as sellers took out all the buy positions as at yesterday. Now, since the beginning of the Asian session stroke the UK session, we have noticed how buy pressure still resumes again around the 1.2133 area, giving us clues that buyers may likely still push price to the upside again. Now, in this regard, I still want to hold on to a bullish bias, though price is confined within a range right now that is between the 1.21600 level and the 1.21330 area, which is going to be our center of focus for today. Now, depending on the direction of the breakout within the zone, will be giving us an idea of where the price will be going for today. So we do want to be marking out this range, and let's see how the participant in the market will be reacting to the structure. And you know how we usually do whenever we have this range. We want to exercise patience and wait for either the breakout of this range to give us an opportunity to buy, or the breakdown of this range to give us an opportunity to sell. So if we are going to be capitalizing on bullish opportunities, we want to be looking at above the 1.21600 area to join a bullish move, and if price continues to climb, the 1.21750 and the 1.21990 are areas where we want to be looking out for more opportunities to maximize the uptrend continuation. However, if in the case scenario price does the opposite in such a way that price breaks down the 1.21330 level, which happens to be the support line of that range, then we want to start considering selling. Now look at what is going on here. If price action ever breaks down the 1.21330, it would have also broken down this ascending trend line, which is expected to guide our bullish ideas for this week. And if price breaks down this ascending trend line, then this might be a sign that the trend line may no longer be able to negate all the bearish attempts in this market, hereby giving us a signal to get ready to sell. But remember that we are not going to be jumping into a sell position right away, as we will need some confirmations to happen before we jump in, as the breakdown of the ascending trend line could still turn out to be a false breakdown, of course. So we really need to see some confirmations to happen, like price showing us signs that buyers are finding it difficult to climb back above the ascending trend line, and this of course will reflect on the chart as a retest of either the 1.21330 or the ascending trend line in such a way that we see signs that buyers are just finding it difficult and sellers pushing price to the downside to join the move all the way to the downside. Now, if price continues to drop, we also have another level here, which happens to be the support line of the range we identified at the beginning of the week to welcome more selling opportunities. So you can see how crucial this ascending trend line is, and of course that range between the 1.21330 level and the 1.21600 area is going to be playing a major role in determining the direction of price action today. So what you want to be doing right now is to mark out the trend lines, mark out those range, and let's see how the market will react to the structure. I encourage you to exercise patience. Let's allow our structures to mature before we jump into any positions in this particular market. So these are my views here on the GBPUSD for today. Very simple setup we have here. So let's allow structures to mature. But if you have any questions whatsoever as regards to my explanations, or you need me to do some clarifications to an aspect you really do not understand, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart, as you will be needing them as reference point whenever you're about to make your independent trading decisions for today's trading session. So I see your comment, Keyjam 009, Keyjam 009, good morning to you. Thank you for checking in. Party 38, you're very much welcome here. I'm glad to have you around with us, and we look forward to seeing more of you in this community. So with that being said, and in the absence of no questions, let's dive right into the last asset on our watch list for today's trading session. So the last asset on our watch list for this week was the XAUUSD, my favorite, which is popularly known as the gold spot. And in fact, we have a very interesting situation going on in this particular market, as participants are still trying to test waters in anticipation of the Fed's interest rate decision coming up much more later today. Well, gold prices continue to decline for the third consecutive day, hitting a weekly low during the Asian session this morning. The decrease in this safe haven demand and the anticipation of a more hawkish stance from the Federal Reserve are exerting a lot of downward pressure on this precious metal. Well, yesterday, remember we had the buy position, but we were taken out of that position. I incurred a moderate loss on this asset before that bearish momentum came in, which we of course took advantage of. Now, this morning, there has been some indications of potential recovery from the daily low as market participants exercise caution during the Asian session around that 1,980, 1,975 area as participants are exercising caution ahead of this Federal Reserve decision coming up much more later today, as you will see around this area. But before we go into the details here, and for the sake of those who missed out on our earlier sessions so that you can be on the same page with us, let's quickly run through what really happened at the beginning of the week and what led to the decisions we made so far this week. Well, it was the price action started on a weak note this week as we saw price fall into a range initially between the $2,006.50 level and the $1,995 area to emphasize the level of indecision at that point. Well, despite the bearish momentum we noticed at the beginning of the week, I was telling us on Monday that this might likely be a retracement of that impulsive leg we witnessed last week Friday, and in that regard we were able to identify a potential buy zone within the 50 and the 78.6% of that impulse leg in anticipation of an uptrend move. Now, when we saw this idea, we were looking out for buying opportunities, which we of course did take advantage of around that $1,997.50 level and the 1,995 area. We took advantage of that move, and in fact price moved over 100 pips in our favor before the bearish momentum began. And as a result of this, we decided that we are only going to be selling if price breaks down the ascending trend line we identified at the beginning of the week, this one right here. And of course, remember that we also identified a support line at the $1,990.60 level. Remember that this level had been a major barrier for sellers at the beginning of this week. We saw what happened here on Monday, selling pressure around this area, buy pressure around that area. We also saw what happened here later on Monday morning. We saw what happened here again during the earlier session of yesterday's trading session, and as a result of this observation, we marked out this level as a support line. That is, if price breaks down the ascending trend line and breaks down the $1,990.60 level, we will be joining a bearish move to the downside. And in fact, if you are taking advantage of that opportunity, well done to you, as we saw the breakdown retest of the 1,990 as we saw price move all the way into the 1,975 area with a whooping 150 pips move. And one interesting thing about this move is that it allowed us to recoup the loss we incurred from the buy position we took on Tuesday's trading session. As you know, we took advantage of some more buy position, had the breakout of the $2,000 area, which of course failed as a result of that selling pressure. Now, with the way things are going right now, for those who still have a sell position running, personally, I'm already out as I moved my stop losses accordingly, and the resumption of buy pressure here are taking me out of my buy position. But if you still, my sell position, but if you still have a sell position, it's very advisable that you either get out of it right now or move your stop loss to secure it, because we might likely be seeing some interesting moves from this area going forward. Now, with a well-secured position at this juncture, what is going to be our next line of action? What are our plans for today? Are sellers going to continue this momentum to the downside, or are there chances that buyers will come in? Well, while trying to dissect the current market structure this morning, I was able to identify this area. As you will see, remember at the beginning of the week, we had the $1,980 level, which we said will be serving as our key level for this week. Now, for those of us who missed out on our earlier sessions, I would like to run through the higher time frame so that we can all see how we identify the 1980 and how we are using it to guide our trading decisions for this week. Now, in that regard, let's go to the higher time frame here. And what we did was to go into the daily time frame where we were able to identify this trend line. You can see since price tested that high in the month of April/May, we saw price nosedive to the downside, finding lower highs in that regard. And we connected the lower highs to give us a descending trend line. And look at what happened a couple of weeks ago. We saw price broke out of that descending trend line to give us an insight into the strength of the buyers in this market at this point. And this was further fueled by the escalating tensions in the Middle East, which of course majority were pushing their capital from currencies into safe haven assets such as the gold commodity. Now, with this situation here, it is psychologically, whenever we experience a huge buy like this, where majority in the market who took advantage of buying an asset at a cheap price, and in this case scenario, let's say the 1,820, we expect at some point in time there could be some retracement phase happen, which will be a reflection of profit-taking activities, as those who have bought at a cheap price will want to be rounding off some of their positions, taking in some of their positions, and this would of course reflect on the chart as a retracement move. And this might likely cause a retracement if price breaks down our key level at the 1,980 back into the 1,900 area, which interestingly shares a confluence with that descending trend line that was broken. And you all know from a technical standpoint that when price breaks out of a trend line like this, we expect price to come back and retest it in anticipation of an uptrend continuation. Now, as at the beginning of this week, we were considering if the retracement will start this week. That is, if price at any point in time breaks down the 1,980 and retest it, then we might likely be looking at a potential retracement move, which will dovetail to a minimum of a whopping 700 pips to catch there if price does that. However, if we see the 1,980 area become a platform for buying opportunities, where we begin to notice buy pressure above this area, then we do want to be getting ready to buy. So it's very important for us to understand how participants in the market will be reacting to that zone above, around, and even a little bit below the 1,980 to give us an insight into what our next line of action will be. And of course, one thing I would like to state here is that if price drops below the 1,980, then we're going to be back within the seller's territory. Remember, this area has been a strong selling niche since the month of May, as you will see here, selling niche here. And if it drops below that area again here, then the breakout will turn out to be a false breakout. So scaling down into a much more lower time frame, we will begin to see things more clearly. Now, this is the 1,980 area, as you will see here, our key level. And of course, you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying that asset. Now, look at what has been going on here since last week, Wednesday. This area had become a strong buying niche for participants in this market. Look at what happened here on Thursday. Look at what happened here on Friday too as well. And since yesterday price dropped into the zone, we saw sharp rejection. And in fact, during the Asian session, we saw another attempt by the buyers to negate all attempt from the sellers to break through that area, which further supports the idea that this area could still serve as a platform to push price to the upside. So As a result of this observation, I identified this zone as a temporary demand zone, and that as long as price remains above this area, we shall continue to look out for buying opportunity. Now let's zoom into what has been going on here in the last 24 hours. So we saw this impulsive move all the way into this area as price tested the 1975 level, came back into our week's key level at the 1980, and the inability of sellers to break down the previous low here was a sign that we might likely be seeing a build up in bullish momentum. And in fact, we saw an engulfing candle springing after price action find a higher low, and hereby transitioning into what looks like a double bottom structure, which from a technical standpoint is considered to be a strong reversal pattern. And of course, whenever we identify this kind of potential reversal pattern, we usually mark out a neckline which we need to be broken to validate the potency of that reversal pattern. And interesting enough, the neckline here shares a beautiful confluence with the key level we identified on the daily time frame, making this area a sweet spot to look out for buying opportunity at the breakout retest of that structure. And in fact, I was privileged enough to join the retest of this structure. As you will see here, we saw price breakout, retest, and as long as price remains above the 1980, I want to be part of an uptrend move. So for those who took advantage of that move, well done to you. And for those who missed out, well, let's see if the market will present new opportunities. So a retest could still happen. Price may still come back and do a retest of structure. And if this does not happen, then we want to be looking forward to the breakout of that descending trend line. Now remember, this descending trend line here has been supporting the bearish momentum since last week Friday. And of course, if price does break out of this descending trend line, then we want to be in for a bullish expectations, as the breakout of the trend line will be a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. So with this scenario here, I have a level at the 1985, as you will see right here, which interestingly shares a confluence with the 1985. So if price action does not come back and retest our neckline at the 1980, then a breakout of the 1985 and the descending trend line here will be another opportunity to join an uptrend move. So breakout retest is all we need, and we have more levels here that we can use to capitalize on the uptrend continuations. So we have levels such as the $1,990.60 level, we have the $1,997.50 level, we have the $2,000 MAC, and of course we have the $2,006.50 area, all of which we will be looking out for more opportunities to capitalize on the uptrend scenario. So that is how we are going to be buying the XAUUSD for today's trading session. So I do hope that we be on standby so that we can capitalize on this move when it finally happens. However, in as much as we're looking out for buying opportunities, you of course know how we do in this community. We do want to keep tabs with the opposite direction as well. If we consider the bearish impulsive move that started yesterday, there are still chances that sellers could surprise us today. And if that is going to be the case, what is it that we want to see on this chart that will make us change our bias from bullish to bearish? Well, personally, if you ask me, I would need price action to take out this demand zone. In fact, it is needed for us to confirm that sellers are going to be dictating the pace. So I would like to see price take out all the buy positions within this area with a breakdown of structure. If that happens, then we want to start getting ready to sell. Now, personally, I will appreciate a retest of structure for a confirmation, giving us some liquidity to join the decline to the downside. There are two ways to which you can capitalize on this move. Now, the first one is for those of us who have been profitable so far this week on the XAUUSD. That is, you have the leverage of risking some of the profits you had made so far this week to capitalize on that bearish move. So you can afford to have your sell stop order below that area to capitalize a downtrend move. But if you are new and this is your first position, you don't have any leverage at all, I encourage you to exercise patience and wait for confirmations in the form of a retest of the zone to join a decline to the downside. So that is the only condition that will make me want to be selling the XAUUSD for today. So let's see how this is going to play out. Our center of focus for today is basically between the 1,985 level and the 1,975 area, where depending on the direction of the breakout today will give us an insight into the possible trajectory of price action for today's trading session. So let's see how this will play out. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we round off for today's trading session. All right. So in the absence of no questions, I want to assume, okay, I see your comment, Jennifer B. Good morning to you. Glad to have you around. Jimmy says, please, GBPUSD. I'm not sure I understand what you mean. We already did GBPUSD earlier, isn't it? We did GBPUSD earlier, of course. I don't understand what you mean, Jimmy. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in fact, it has been a wonderful moment with you guys as we are starting the new month on a positive note. For those of you who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I encourage you to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to enhance your own trading decisions and strategies. Well, today so far we were able to attend to 4 major assets which we have been monitoring since the beginning of the week, which include the USOILSPOT, the USTech100, GBPUSD, and of course the XAUUSD, all of which we were able to identify simple trading setup using fundamental tools such as trend lines, key levels, and chart patterns to gain insight into the market, and of course use that data to strategically position ourselves ahead of the next move during the New York session. So I encourage us all to exercise patience and allow the structures we've identified today to mature before we jump into any position. And please ensure you have a well-defined risk strategy to protect your positions against any sudden pullbacks that might happen to take you out of a loss. So on this note, I want to wish us all the best of luck, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing as we get prepared for tomorrow's trading session, which promises to be another interesting one as we look forward to the Bank of England's interest rate decision coming up tomorrow. So do have a wonderful evening, everyone. See you all tomorrow, and bye-bye.